Thank you so much. Ladies and gentlemen, I'll be presenting on quantifying the impact of international food price spillover on South Africa domestic market, the short and long-term dynamics, and the transmission channels. We are four of us presenting. Working on this document is myself, is Chris Jerome from Paris Business School in France, is Dennis Uni from University of Namibia, and a colleague of mine at the Northwest University, Rialeboha Marapa. This will be what I will focus on in my presentation today. When we look at South Africa, over the years in South Africa, there have been a lot, over the years in South Africa, there have been a lot that took place in South Africa. And over the years, price stability has always been an issue over centuries. But when you look with the COVID-19 pandemic and the Ukraine-Russia war, we could clearly see the skyrocket in price, some of us even the cooking oil and other oil, and hence the need to check to see what is the cause, where is this interconnectedness such that there is a war in Ukraine and suddenly we see prices in South Africa are increasing on certain food items. And this is because of spillover effects in that country. And now we need to look what are the transmission channels through which a price in another country will definitely have an effect in South Africa. And that is why we are looking at this study. But even though South Africa is self-sufficient in terms of food prices in the SADC, but it is still exposed to global food import. And quantifying the impact of this food import shock in South Africa is very important in a study. And when you look at those high prices of inflation or increase in food prices, it has both long and short-term effect in the economy. We could see that in the short run, it intensify inflationary pressures, leading to monetary policy challenges. It reduces the lending power. It could lead in the long run to food insecurity issues. It could lead to inequality and poverty. It could also lead to high level of panel, food insecurity, nutrition, and others. But now, many studies also have been done whereby few focus on certain aspects in South Africa. But the need for this study today, what we want to do, or we are doing in this paper today, is we want to assess the level of international food price spillover on the South African domestic market, both in the short and the long run. Second, we want to also check what are the channels through which a change in price, for example, Ukraine war, or other international food prices, which channel does it bring into the economy of South Africa? And lastly, we want to make policy recommendation. But before we dive into that, there are some theories that have been looked into that look at this inflation and food prices. For example, the cost of production, whereby it asserts to the fact that when there is an increase in the production cost, obviously there will be an increase in the prices of goods and services. Others, like the cost push theory, where they focus on to say if there is an increase in the production cost, the final good as well will increase. There's also the price transmission channel that looks at that explain the fact that a change in a food price in another country would definitely have a mechanism through which it affects other country. And lastly, the volatility transmission theory, which explains other uncertainty in the market and that can spill over to other markets by being volatile. As could be seen there are studies that have been done in other countries, but various methods were being used. Even though they look at volatility, they also look at interconnectedness and transmission channel, but their methodologies which they used were different. As could be seen, that the only one that used something close to what we have is that of Belcilia and Bekan 2020, where they used a forecast error variance decomposition, and they were looking at the oil price and exchange rate on agricultural commodity. But most studies that were done, and even those other authors, they did something in South Africa, but most will focus on the determinants of inflation without quantifying that impact, and hence the need for us to revisit, to look at the connectedness of this reality, of this macroeconomic variable reality. Hence, our study contributes in that it employs the time-varying parameter vector autoregression that is based on the connectedness to quantify the international food price spillover on domestic food inflation in South Africa, whereby and distinguishing both the volatile, and we are looking at it during the short term and in the long term. Secondly, our study would identify the transmission channels through which this international food inflation contributes to domestic food inflation in South Africa, and in this case, the quanta regression will be used. The time-varying parameter vector autoregression starts with a structural VAR model. It starts with a structural VAR model, then it goes further to include the generalized forecast error variance decomposition of Kopp and Al 1996, and as well as that of Paretian and Sheen, whereby they started looking at the moving VAR. But one interesting thing about this is that this author, Zantonio et al., added by decomposing this model by including the connectedness measure, whereby we can look at both the short and the long-term frequencies in that system. And the time-varying parameter vector autoregression, it has two matrices that we will look from, the to and the from, that captures the connectedness of the respective goods in that market. And looking at the total, these two accounts for the degree to which shocks in a variable, say I, is propagated to all other variables j, while from is associated with the extent to which variables of I are being influenced by other variables of j. But the focus is more on this net total connectedness, and net total connectedness is obtained by deducting the from the to. And if the net total connectedness is greater than 0, this means that the variable I is more of a net shock transmitter. So if the net total connectedness is positive, greater than 0, then they are net shock transmitters. And on the contrary, if it is less than 0, negative, then they are net shock receivers in that market where we have both the international food price and the South African food price. And here are some of the formulas for noting the to, the from, the net connectedness, and the total connectedness. And for the second objective, in order to achieve the second objective, the quanta regression was used of that of Koinka and Baska 1979. And the good thing with this quanta regression is that it permits us to explore the asymmetric effects of some selected quantiles in those spillover, both in the short and long-term aspect, and be able to predict what the outcome of it. And this quanta regression, they are in 3 quantiles: the lower quanta, which is the 0.25, the medium, and the upper quantile that is being captured. Data was collected from January 2010 to December 2023. Monthly data was collected, and as you see from various sources, and you will see as I will present our result, you will see that we'll have most of our data was obtained from the Food and Agricultural Organization, but we'll have a composite global food index, which we derive using the principal component analysis. Then we also have foods like meat, dairy, cereal, wheat, which were from the world market, and that was gotten from the Food and Agricultural Organization. We also got certain specific specific good food items from South Africa like barley, maize, oats, sorghum, soya bean, sunflower, wheat, which also we got that from the Food and Agricultural Organization. Then we also got a geopolitical risk index, the US monetary policy uncertainty, the South Africa equity market. We got that from, it was retrieved from this website where we got, the date was not yet put, they are still working on that, but you can get that, it was retrieved from this website, the policy uncertainty report of Baker and al. And lastly, we got the exchange rate, which is the rand to the US dollar, interest rate, gold price, and oil price from Refinitiv Econ data stream for the analysis. So for us to start with our analysis, there were some preliminary results that were done, which is the descriptive statistics. And we can clearly observe that when you look at all of this, you will see, take note of something. Our result will always have return and volatility to check those connectedness. So, but you also see that when you look here, most of the coefficients here, it shows that on this return of the descriptive statistics, most of the food prices exhibit a positive return, connectedness return here, with the exception of sugar in the world market. In the world market, that is negative, and the highest, with the highest price return is sunflower, as you could see there, with 0.006, and the lowest obviously is sugar. But when we look at volatility, everything, with the volatility, all of them exhibit a positive volatility during the period of study. But now the lowest, in terms of the lowest was meat price, while the highest was barley price. We went further to look a bit at the correlation between these variables. As you see, here are the foods in South Africa. When you see W is in the world as well in the system to look at the correlation metric 6. You looking at both the volatile, here is the return, here is the volatility prices or series. And we notice that looking at the correlation among the return variables, obviously, there was a positive correlation, as you see, a 0.5 between oats in the world market, as you see, and cereal in the world market of 0.5, and that was the highest. And it is the same as well with the volatility in the correlation among the volatility market. You will see it to be 0.5, and this was the highest. But also in the return metrics, correlation metrics, we also had a high negative of 0.3 between soya beans and soya beans and the oats in that South African market to show the correlation. So we will go to the results to see, like I explained, for us to be able to explain or to achieve our first objective, which is to assess the international food price spillover on domestic food market, we had to start. And with this first graph, you will see, with this first figure, we first of all started with the estimation by using our composite food price, international food price, which I said we got it by looking at the component analysis. Here is it. And you have it just here, and the rest you see the South African, the food prices, the prices in South Africa. But our focus is here, the total connectedness. What do we see here? From this total connectedness, we are seeing a total connectedness of 20.93%. And this column immediately after that is the short run column. This is the long run column. So we are looking, this is the total. of the total net connectedness. This is the short run of that total, and this is the long run of that total. And looking at this connectedness of 20.93%, it reveals that the focus variance of the shock in the South African domestic market and this global food, like you see, this is the South African domestic market, and this global food market is being explained. The total connectedness is 20.93%. What does it mean? It means most of the shocks in that system and the connectedness is this much. And out of this 20.93% here, it is mostly explained by short-run connectedness of 13.75. While 7.19 is the long run. So more of the connectedness is mostly in the short run and not in the long run. And now when we look at it also, among these food items which we see, which ones are the net transmitters of this total connectedness as well and return on connectedness, or are the receivers of shocks? We look at it here. If you remember, I had told you, when you see a positive total connectedness as this, it means what? This is a net transmitter of shock. When it is negative, as you will see, it is a net receiver of shock. It's based on this connectedness index. And you will see this is a total, is it row? Yeah, this is a row for total. The second row is in the short run, and the third row is in the long run. So we see that as a total connectedness, we could see that this food item, soya beans, is a net soya beans is a net transmitter of shock into this system of the South Africa food market and the international food market. But now, it is then followed by our global food index. But the rest in this system are all receivers of shocks. The remaining market, they are all shock receivers. And in the short run, as we will see here, when we look at in the short run, maize is a net transmitter. Oats is a net transmitter. We've already spoken, soya beans also is a net transmitter in the short run, while sunflower as well is a net transmitter. But in the short run, wheat is a net shock receiver, as well as barley. But in the long run, this is as well also a net shock receiver in the long run. Net shock receiver in the long run, net shock receiver in the long run. But now, even sorghum, even though in the net was a shock receiver, and both in the short run, but in the long run is a net shock transmitter. With sorghum, both in the long and short run, the total, it is a net shock transmitter. With sunflower, as a total, is a net shock transmitter, while in the short run is a net shock receiver. In the long run is a net shock transmitter, but in the short run, net shock transmitter, but in the long run, net shock receiver. So this is what we see with this. Now, the next graph is, remember here, we're using the global food index. There were 5 major food items that had an international price that we used to see now. Let's split that composite global food price to see from these food prices, maize, dairy, cereal, oil, and sugar, to see what results are we going to get. Now we realize the total connectedness being 34.94%, which means there is a strong degree of spillover in the long term, as you see, long term, than in the short term with 13 point. When you compare this is higher than this. So in the long term, that is a connected. And we could see that when we look at the individual food item, the 5 major international food prices for this item, the total connectedness is a bit higher as compared to the previous one graph, which I showed you, where we use the total, the global food price and not the individual food prices. So Now we can also look at it the same way of analysis that we analyzed. We can also see that soya beans is still the most vulnerable with that. So the positive, as you see, the negatives are the shock receivers, while the positives are the shock transmitters into this market. Now we go further to look now at volatility connectedness. With the volatility connectedness, we are also still focusing, in this case with volatility, we are still looking at the global food price index as an index. The total connectedness is 21, and we could see that it is mostly ascribed to long-term connectedness and dynamics into the system. And we look here, most of it, like I said, the negatives are the shock receivers, while the positive are the shocks absorber. When you look here, soya beans still with 24.8% is more of a volatility connectedness shock transmitter, as you see here. But the rest the one with the highest shock receiver of volatility is sunflower with negative 16. And now this other one is the same thing, but now we split that and we see it, the total connectedness when those food prices are now splitted, the 5 major international food prices, we see it also being higher for volatility as compared to return. And we could also see there the negatives are the shock receivers, while the positives are the shock transmitters. So in order for us to see, after we've seen to quantify those impacts, our second objective was now to check which are the major transmission channels through which, when there is an increase in price in another country, is being transmitted to South Africa. And that is when we did that. Here were the variables that we choose as I selected on the table. This is the total. This is a global food index. This is the total. This is the short run. This is the long run. And here is the quanta where you see. We can also clearly see that when we look at the total spillover return, it shows an increase in geopolitical risks. We see geopolitical risks was significant when it is total, even though at this stage it was in the short run, it was not significant, but in the long run, it was significant. When we look also at other significant variable, we look at the rand to the dollar exchange rate. It is significant across both in the long, short, and total, but it is negative. You could see that that coefficient is negative, to say that the depreciation of the rand helped to decrease the level of spillover of that, and that is why you see the value being negative. But when we also go back to look at the equity market, we could see the equity market, we could see is significant and positive. We look at the oil price, significant and positive, as well as during the COVID. We could see a significant and positive. All these significant coefficients shows that they were the ones through which an increase in price of a good in an international market will transmit into the system through this food prices. Through these food prices. The next one we should look at it now are drivers now of this total connectedness, but in this case we are looking at these drivers now, looking at the volatility part. The other graph was the return, and now this is the volatility aspect of it. And we could also clearly see as well that the geopolitical risks also, we could see significant both in the short, in the total, the short run, but not in the long run. But you could see the geopolitical risk, which is significant. And we could also see the monetary policy in this case. Monetary policy uncertainty being significant across and negative, as well as the exchange rate being significant and positive, while the oil price was positive and significant, as well as the COVID-19. So here we could clearly see also that with the exception of the gold price, that was positive, with the exception of the gold price that was positive, and in the volatility part, the rest of this market were significant in the global, the volatility, the drivers of the volatility in this market were more significant. And we come to the conclusion of this study to say that this is the data period that was used for this study, that those are the methodology. So we could clearly see that there is a slightly higher return connectedness than volatility connectedness among the food markets. And the shocks was from the global market dominate shocks from the South African market. We could see that. And also the total connectedness from our first graph that I showed you was 24.93, whereby 13% was associated to short run dynamics, while 7.2 was long run. So it was mostly driven for the first graph where we had a composite food price by the short run. And the foods that were the main transmitter of shock into that system was soya beans. But with the remaining South African food, all of these were mostly net receivers, and that is why you saw most of them had but the negative values. They were net shock, they were net receivers of the shock into that system. But in the long run, we could see that oats, sunflower, and maize market, they were more of net shock transmitters, while barley, sorghum were the net shock receiver into that system. But in the long run, it was only shock from soya beans, wheat, and sorghum that dominate the shock. So they were more of net shock transmitters in the long run. And also, looking now at that global food price index, we could also see that the net transmitter of risks in the domestic market in South Africa was mostly also in the short run, which we saw. And that connectedness now, when we use the global food price, when we splitted the global food price index to have those 5, we saw the value, the total connectedness being higher as compared to the previous 20.93. And when we look at the volatility as well, volatility was 20.9%, while more of this connectedness was more of the long run connectedness compared to short run. But when also the volatility connectedness among the world food price and South Africa food price was used, we could clearly see also this one being higher. And you could see here when it was a return, it was also higher compared to when we use the global food price as an index and not the individual food prices. But it shows that the interactions there, more of the shocks were more, there was more volatility connected, which was higher here. And as we are about to conclude, we also saw that the geopolitical risks, equity market in South Africa, oil price, and COVID-19 pandemic were more of the main drivers of the return risk transmission from the global food market in South Africa. Even though the depreciation of the rand decreased the effect of the spillover. We remember the rand had that negative coefficient. But also regarding the volatility risk transmission, we realized that the gold price, the South Africa equity market, the fixed income market return are the main drivers of volatility shock transmission in that global food market. Maybe because of time. Okay. These were just some recommendations that we made. So maybe because of time, we might open up for maybe comments then. You'll see. Thank you.